Hi, and welcome to Sunday Night Charts. We take a look at charts to help you with trading week ahead. I'm your host, Steve Van Meter, with a special request this week to go over the VIX, so we'll do that. All right, let's get right into it. Moving average, the colors, my colors on your screen. 50 days green, 100 days blue, 200 days tan. Price versus momentum. Price is general direction. Prices are headed. Momentum is a rate of change. A bullish indicator for both is positive. A bearish indicator for both is negative. Momentum often, but not always, leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is a level buyers can't break, and support is a level sellers can't break, or resistance is where sellers are at and support is where buyers are at. Technical analysis does not predict prices. It can be used to determine the risk of a trade, help with time and trade, and provide direction to the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. Let's get into the S&P 500. Remember, we have switched over to the ETFs because my charting program does not do volume profile on the major industries. Yours probably does. But for those who keep asking, I do use a program called Think Pipes that is only available to TD Ameritrade institutional advisors. I believe there is a retail version, but you've got to be a retail client. Check out tradingview.com. All right, so what do we have this week on SPY? Annual momentum on the short-term, flip bearish. That's almost meaningless. This ultra short-term, unless it's part of a bigger trend as a moment, means very little, as is the short-term price here. Let's go and look at SPY, see what we can see. There is a fair amount of trading volume up here, as you can see in these green bars, and it tells you that's where there's some price support. So if you're looking at SPY, you've got some price support at 380. You're starting to see potential topping pattern, and your bigger price support is going to be at this purple line here, right around 369. And if we get a move down to 369 under the 50-day moving average, you start to see something that's looking toppish. But at the moment, it's bounding off its 50-day moving average, but those movements aren't with a lot of conviction. It's not like down here where it tagged the 100-day in blue and it kind of moved off. Here we're seeing, bounce off the 50-day and the bounce, think of it like, a rabbit hopping. It's just not making these big moves. And so that means it's likely to come down and visit this 369 level, where, of course, bulls will want to see it hold and get some strength there, maybe off the 100-day moving average. But right now, this is not looking strong. The only strength here is it's got some volume to it. Let's go on to the Qs. NASDAQ 100, QQQ, ultra short-term, on price and annual momentum flip. Again, virtually meaningless. Intermediate term price is turned bearish. Now that is kind of interesting to me. So let's go and look at the Qs. And what do we see here with the NASDAQ is it's sitting under its 50-day moving average in green, hit that acted as resistance. And you'll see how there's this red kind of zone of volume here, the mix of the screen. That's where the most shares are traded hands. So this kind of moves every day as my program updates. You'll see it in yours. And so the fact that the NASDAQ is kind of bouncing off or running to resistance on the bottom side of that tells us that its path, unless it finds some buyers in here real soon to get back and get another run at the 100 or 50-day moving average, from more of a bigger picture, you're looking at, 294. And there again, that starts to look like a topping pattern. You got a little, maybe a left shoulder head, right shoulder, and a bit of a neckline kind of running in here that could break down. But the nice thing is, if you're bullish on tech stocks, you've got plenty of support that has to be worked through here at 294 before you have to really start to worry. Let's go on to small caps, which are super bullish. Everyone is massively bullish on the U.S. small caps, the U.S. economy, perhaps reopening. What they don't realize is 52 weeks, over 700,000 initial jobless claims. What do we see here? Flips on price on ultra short-term and short-term, no big deal. Annual momentum on ultra short-term went bearish, no big deal. Not seeing anything here that on either of those that would change the bullish narrative. Bounced off his 100 or 50-day moving average, looking to, it hasn't bothered to hardly touch it at all. So it doesn't need to. There's plenty of volume sitting right here. So if you're bullish on the small caps, I mean, this is at the moment current price level 222 is looking at support. If that doesn't hold, you've got a decent amount of support at 211. If you don't hold 211, you're starting to look like a topping pattern, but you can hold 211 and still be in bullish narrative with that. Let's go on to the energy sector, which as of last week suddenly changed. Let's look at crude oil too. Oh, we should look at the vol space before we get too far here. Let's look at the VIX, and what you see is this, repeated vol crush. And I do not suggest you trade the VIX, but I know many of you do. You're looking for this to break over 31 before you get too excited about what's going on here, or 36 to 31 is where the vol shorts are at, the sellers are at. Maybe without the SLR exemption, there won't be this seemingly unlimited amount of dry powder to short vol here. So it could get interesting. Anyways, back to the energy sector. Those two minor changes on the ultra short term aren't anything big to get excited about. But let's go look at XLE. And you can see now it's starting to come down. We'll look at crude oil. There's not a lot of price support, and we're looking at a 1-year chart. Now, some people will say, well, why don't you look at a 2-year or a 5-year? Well, do you think the people that bought 5 years ago are still holding position? Well, if they are, you can see there's not a lot of price support. Let's see what's going on the last year. You've got price support at XLE in the zone between 41 to 44. Now, there's your support zone. Let's take a look at crude. Picture on crude is a little more interesting to me. Your first support on crude is at 52. So you notice it broke through that big move down on Thursday, kind of tagged this 50-day, came back up to this prior level of support, now acting as resistance, and then the major level of support down at 41. Now, that's kind of interesting. So if crude doesn't get its mojo back real quick, it's headed down, more likely to head down to 52, and find support there before making a move higher. All right, let's look at financials. These have been on a tear due to the fact that the SLR exemption's been in place. Now that that's going away, my guess picture for financials is going to change, as they were making quite a bit of money on extending credit lines to investors and other people to speculate on stocks. And so there's not a lot of shares traded up here. The support for financial XLF is at 31. Then you're down to, say, 29, which this line is moved down a little bit. So we'll say 28, 29 is really where you see the volume support, and then you're down to 25. So it'd be interesting to see. You see there's some negative market reaction in these red candles after the XLR exemption was or the expiration of the XLR exemption was announced that it will go through on March 31st. We'll see how that goes. All right, well, I mean, that is going to happen. The question is, how will financial stocks react to it? Utility sector back being bullish. Let's take a look at it and see what we have on the XLU right below. And it's just bouncing in between support. You can see this big heavy point. I think we talked about this a couple weeks ago. There's your support level, lots of volume. Buyers came in and run into where the sellers are at, just above it at 63. So playing ping pong between 59 and 63. At this point, the likely move is to retest support unless the buyers can come in here and hold that level. Let's move on to the industrial sector. This remains bullish. We haven't looked at the XLI. Let's just go look at it for fun. Where is XLI on here? Where is it? There it is. And it's kind of run up. You can see it's looking like, IWM at this point, looking like the Russell 2000. Support down here at $88 a share on the industrials. Move on to gold miners. A lot of people still bullish on this. Perhaps they shouldn't be when we take a look at the dollar. What do we see? Short term went bullish, no other changes, and I want to say the 3 and 3 month I think flipped, or one of these flipped. I don't remember which one. 3 and 6 month are momentum are negative and rising. 9 month is negative and falling. But let's look at GDX, because there's some things you kind of like about it, things you don't want to like about it. What I don't like about it is it's bouncing off or it's hitting resistance at its 50-day moving average. And that has been a very clear sign that, hey, prices are going lower here. It's got major resistance just above it at 35.50, and support now, it's sitting right, it's hovering right on some support here at, say around 33.34. And this kind of line in the sand that if it crosses 31, that's where, the floor falls out. You see this topping pattern. You can really see it, right? You see the head and shoulders pattern inside a bigger kind of elongated, left shoulder, head, and then this kind of multiple head and shoulders right in here. You can see Here's the left shoulder, head, right shoulder. So it tells you this pattern is very clearly looking like a topping pattern. So you can't be bullish on this yet. That goes, so does the rest of the stock market. That would deem to be very bond bullish. How about emerging markets? Only change here is on the annual momentum on the short term. Let's see, what is EEM looking toppy or not? Ew, it is looking toppy. Here you have a left shoulder, head, right shoulder. Let's draw a neckline in, shall we, for fun? They're always fun to do. So here we'll just say, and look, I'm not trying to do this to an exact science. I'm just trying to give you an idea. You know, some people are very specific with their lines, but that starts to look like a topping pattern. You've got a bit of support at 50. Your big layer of support is actually, I mean, really down here at 44, but you'll probably run into some support, I would say, around this 46 level here. But nice little topping pattern there under the 50-day moving average. So not a good sign for EEM. Again, watch the dollar. All right, something everyone can be bearish on is TLT. No changes there. Potentially a halt to the big decline in TLT with the XLR exemption expiring. This has been, you know, something short sellers have just had no problem shorting, borrowing money, shorting this, and driving stock prices higher due to the liquidity going into brokerage accounts. If we zoom in a little bit, it is likely, you know, let me just say this: when you see a big spike in volume, that is normally indicating a bottom. I mean, normally does. I mean, this whole pattern right here, after all this what's called stopping volume, you want to get excited about, and the sellers came in and pushed it down. So from the perspective of the SLR, this going away should be bullish for bonds, should be bullish for dollars. So the question is this the bottom? You know, there was a decent amount of volume, again, coming in here. But with all the shorts, the question is, you know, are the shorts done? Don't know. I mean, the economic data, I mean, it's very conducive to the bond market. So the only question is, are the sellers done? Can the buyers take over and squeeze them out? We will be eagerly watching that, as I am. Bond king. High yield bonds, no real change here. Annual momentum on the ultra short terms flip bearish. I think the 3-month momentum is now negative and falling. Take a look at HYG and see what we've got here. I mean, it certainly looks like to me that sellers have been, you know, happily selling along here. You see all of this volume where this red bar is at. A lot of shares changing hands there under the 50-day, under the 100-day, looking for next level of support at the 200-day moving average. Volume is sitting at 84 a share. And without that, it's really looking like, you know, if this does turn out to be a topping pattern, the next major move is between 82 and almost 83. And why does that level matter? Because that's the level that if it breaks, the whole bottom falls out. I mean, that's been a level that thou shall not pass or bad things happen. So right now, looks toppy to me. I'll let you be the judge. Let's go on to gold futures. Hey, a little flip to bullish on the ultra short term price. No big deal. 3, 6, and 9 month are all negative and rising. Starts to be a positive sign. And if I could get my charts up, let's get to that and see what we've got with gold sitting at this heavy level of price right here. So it's trying to determine, you know, it's trying to find this out. Is this support or is this going to be resistance? That is the question. If this is now support, gold could run back up into, say, 1800, 1820. If this does not hold, if these are sellers in here, right where we had our prior line at 1750, this rolls over and you get a revisit of 1687. That doesn't hold, confirms this is a topping pattern, bottom falls out, market goes with it, bonds rally, dollar rallies. Watch the dollar. See, the dollar's going to be really critical here for bonds, emerging markets, equity, everything. I mean, dollar's going to become the most critical thing to watch. Silver futures, ultra short term, both flipped. Otherwise, no changes on silver. Let's see where price has gone. I haven't looked at this all week. Still can't get through above 27. Remains overhead support right there between, high 26, low 27. Support right dead at $24. Silver, I mean, the trend is rising. Question is, can it keep this trend sitting under its 50-day moving average, acting as overhead resistance, but the 100-day is acting as support? Decision time for silver coming. I think the dollar is going to help it with that dollar. All right, we have ultra short term, bearish, bullish, flip, no big deal there. Other than the 3-month momentum is now positive and rising. So what do we want to see from a bullish indicator? If we're watching the dollar, we want to see the 6-month and 9-month. It'll be in order. Should we probably likely see a 6-month turn gold, which is negative and rising, and a 9-month turn? Those are things we want to look for. The chart looks great. I mean, this is kind of what you want to see in a bottoming pattern. This looked like a bottom before, didn't make it, came down to a prior level of support, held that, reconfirmed it, held that, crossed its 50-day here, tapped below it, but got over it. 50 days curving up and rising. This is a positive signal. It is tagged overhead resistance at a prior level of support, very normal. It's hugging its 100-day moving average on the bottom side. Still next move. Now let's look at UUP because I have no trading volume there. You see where the shares are traded is right up here in this cluster of shares. Now where does that map out on DXY? Right here at just under 94. The next move for DXY is to break into this overhead zone of support, this trading zone, and get up to 94, where there's a lot of resistance there, a lot of shares traded hands. That's the next direction. If the dollar gets out of this 94, if it gets above that, the equity market's toast, emerging markets are toast, bonds are going to take off, precious metals are toast. That's what you're looking for, my friends. So I appreciate you taking the time to watch as always. We'll be back on Monday for the macro show. And I'm your host, Steve Van Meter. See you then. The content of this video provides educational information only. Is not intended to provide investment or other advice. It is not to be construed as regulation or solicitation by selling security, financial instrument, or participating in a particular trading strategy. This video was prepared by Steve Van Meter. Personal capacity opinions expressed in this video that do not reflect the view of House Financial Advisors Inc. or Steve Van Meter Financial.